Hi guys, welcome to TA Invest, algo powered mutual fund decisions. Have you heard that phrase before? You probably haven't until now. You see, mutual funds, we all know, are fantastic and we should all be investing in mutual funds. But there are two major problems to this. One, we don't know which mutual fund to pick. And two, what if the market falls? What happens to your money? Trade Academy solves this problem. Now, before that, let me talk about a disclaimer and explain what TA Invest actually is. It's just a smart algorithm that tracks when the market switches from a bull phase to a bear phase. And this usually happens only once or maybe twice a year. Let me also explain that we're not an advisor. We will not be recommending funds to you. Two, we use an algorithm to remind you when to switch from equity to bonds. And three, when buying equity mutual funds or debt mutual funds, we will give you a basic idea on how to use it, but you can choose anyone that you wish. Now let's understand the algorithm. First, we need to understand that markets are cyclic, which means there are phases of bull markets, that is when markets are going up, and there are phases of bear markets, that is when markets are falling. Now, equities and bonds move in opposite directions. Now, this is very interesting. Look at this. When equity goes up, bonds usually don't give anything even close to what equity does. And when equity falls down, bonds actually give you a safe return. Now, what if you could have best of both worlds? You're invested in equity when the markets are going up, and you're invested in bonds when the markets are going down. Now, let me give you an example. In 2008-9, when the markets crashed, Nifty fell 60%, and bonds, well, they went up 10%. Interesting. And second, when in 2009 markets went up, Nifty rose 100% and bonds didn't give you that great of a return. Now, Trade Academy Invest helps you keep invested in equity when markets are in the bull phase and helps you keep invested in bonds, rather switch to bonds when markets move to a bear phase. This is the beauty of Invest. And as you know, it's a simple algorithm that you can learn as well and apply to your investing. Now, let me show you the algorithm in action. This is the CNX Midcap. It's a monthly chart. Each bar here represents one full month. And you'll also notice since each bar is one full of price movement, this is the price on the right. This is a pretty long-term chart, right from 2007 to 2017. Now, if you had invested in a normal mutual fund, let's say an ETF mid-cap fund, you would have invested here and you would have held on for 10 years and you would be here right now. Not bad. But here's what TA Invest does. It buys every time there's a swing high break using an algorithm. Obviously, it's a rules-based approach to investing. And you're holding on until the current bar closes below the low of the previous month. And you would then exit from equity and invest in bonds. So as the market is falling here, you're actually earning from bonds. Now notice, you will never exit at the top. That's impossible. But you can exit after the market shows signs of losing momentum. So at this phase, you would be making money through bonds. Then in this blue line, you would enter again in 2009 and make hay while the sun has shone over mid caps and made money over there. Again, the red bar closed below the previous bar's low. You would have exited, put into bonds, entered. You're making some money here. Also notice here we have a false trade. You've entered into equities, then switched back to bonds. You didn't earn from either for a while. Then you had to re-enter in equities and earn money in 2014. Now, the next question is, this looks great, but what's the difference between just investing in a mutual fund and TA Invest? So let's see. I will show you the returns right over here. TA Invest from 2007 to 2017 would have earned you 381%. Now, if that wasn't good, you should know that we've accounted for 15% of capital gains tax. So every time you made a profit, we've actually removed 15% of that, assuming you'll give that to the government. And despite giving that, you still have made a 381% return in this backtest. And the ETF CNX Midcap, if you invested in a mutual fund, the same period would have earned you 165%. So this is obviously far, far better than any mutual fund you would invest in. It's an active way of looking at your investment smartly through a rules-based approach. Now, let me also show you the entire backtest on an Excel sheet. So we have all the prices here. So you can see we started with the prices on 2007. all the way down to 2017. It's all coded over here. And we found out that your total return, 381%, this is what your equity curve is. So you will see some small moves down. That happens, and you should be okay with that. But you just have to be patient for 3 to 4 years. And this is something that can actually enhance your mutual fund investment by being a little active by switching from equity to bonds once a year. Now, once you enroll in the program, it's a one-time fee. What you're essentially paying for is understanding the system. We will have a 2-hour consultation, and we'll guide through any questions you have of how to do this. All the best. If you have any questions, go to tradeacademy.in, fill up the form, and we'll call you back and make sure all your questions are answered. All the best. Trade well, trade safe, trade algorithmically.